All right, everyone. Welcome to PII Testimonial number 4. I am joined by Ben and Rachel. Ben and Rachel, welcome. Thanks so much for doing this. How are you guys doing today?
Great, great. It's definitely a pleasure to be on the channel.
Yeah, and let us know where you are because it's pretty cool if you ask me. So where are you guys located right now?
Well, we're in Dalsnes, Norway, which is right off the coast. It's on the fjord coast of Norway, and it's
Nice.
currently 8:38 p.m. and it's sort of raining outside.
Awesome, awesome. So of course we're gonna discuss what you guys are doing in Norway and your life, which is pretty cool actually. It's kind of like a dream life for many people. So let's start with that. Just tell me a little bit about who Ben and Rachel is, quickly about your background, career information, what you do for a living, if you're retired now, etc. Just if you could briefly sum up your life in a nutshell.
Well, basically, I was both of us are 41 years old. I guess we like to say we're financially independent, which we are. In terms of retiring, we try not to use that word because we're just
Yeah.
sort of in a phase where we're testing out this passive income approach. So I don't want to, slap myself in the face in 5 years or 10 years time and say, well, it didn't work. So we just like to say that we're trying something new. But basically, I studied finance at school. I've always been involved in stocks, and so I studied finance at Ryerson University in Toronto. And then my lovely wife, Rachel, here, she studied procurement in Shanghai. We actually met in China in 2005.
Nice.
But basically, I've been studying. I got into finance because I wanted to get the girls. Actually, my mother used to say to me, like I used to see a lot of very fine looking gentlemen dancing with the girls in university or high school, and I told my mom I want a girlfriend too. And my mother used to say, honey, you got to get the money first before you get the girls, because coming from a strict Asian upbringing, that was sort of the push. So I said, okay, how am I going to get this money? And I started to take my allowance money and I started to play the stock market.
Uh-huh.
And I started to try to time this monster. Like I tried to time it with Barrett Gold. I tried to time it with this company called Nortel Networks.
Yeah. Rings a
And
bell, yeah.
yeah, and I found that I lost a ton of money, and it just didn't work. And I was even in the front page of the Financial Post when I was 18 years old. And I don't know if you're going to share the article later, but
Yeah, we
it's
will.
interesting because it just wasn't working. I mean, the problem with timing the market for me was you always couldn't get it right, and I'm very impatient. I'm very emotional. And that's why I found out eventually I actually almost quit investing altogether because I just didn't know what the hell to do. But I think something sort of clicked in 2018, and it was sort of the passive income approach, and particularly dividends.
Yeah. Yeah.
Uh, and I did take a different approach from you guys initially. So I was strictly focusing on single stock dividends.
Hmm.
But then I
Right.
started to see there was a lot of sort of ETFs, which I'm sure we'll get into later, and they started to pay dividends as well. And that's why when I found out about you two, I said, "Hey, look, we're very much similar, but we sort of took two different routes to get where we
Yeah.
are." So that's pretty much the two of us in a nutshell. I've been working in the financial industry for at least 20 years, and I am sort of a financial advisor. I have the designations anyway.
Okay.
So
So
that's a
you
little
are
bit of
certified.
background.
You're certified financial advisor. What did you do in your career when it came to your financial career, finances?
Well, I worked so when I was in university, I worked for Raymond James, which was a full service brokerage house
Yeah.
as an investment advisor assistant.
Nice.
And then I worked for TD Securities as a sort of a trade analyst. So basically, middle office, back office for reporting. And my focus was on programming, so automation of reports. And then later on, I moved to Alberta because I got a little tired of living in Toronto, and I worked for two companies out there. So one's called Alberta Investment Management Corp, and I was a risk analyst. So I focused on risk analytics for the portfolio. And then after that, I worked as a sort of VBA programmer for the Service Credit Union in the investment advisory department.
Very interesting. Our journey sounded alike when it comes to investing. I started with trading and just trying to time the market. Didn't work. Then went into dividend stocks as well, single stocks, CIBC, Bell. And then I just realized, okay, well, the dividend is all that really counts. And how can I get more with the same level of stability? And that's where I discovered, what we're invested in now, which of course we're going to talk about. So, and by the way, just for the audience, fun fact, we actually met Ben in person last year in Panama. We met at Picasso. We had a lunch there, and we had some very interesting discussions as well. So
yeah, one thing I want to mention about meeting Ben, something the audience doesn't know, is that he's actually 6'5", 6'5".
Yeah.
So
6'2".
6'2". Sorry. So that was surprising when when we first saw him. I was like, whoa.
Very tall. Yeah, very tall. So Ben, tell me about how you discovered income investing, or the strategy that you're doing now, which we'll share you've been kind enough to allow us to share your portfolio. We'll do that a little bit later, but how did you find the channel? How did you discover this style of investing?
Well, I think what happened was I understood in 2018 that dividends is how the world runs, because fundamentally, whenever you look at someone that's retired, they're going to rely on the CPP. And the CPP basically takes that money and it generates dividends. And ultimately, the whole world runs on dividends. And I said to myself, I'm tired of timing the market, because it's a lot like, I always compare it to sort of dating. And I was very bad at dating. You're always going to get it wrong. And even if you're, the hottest guy, the best player, you're going to get it wrong, because the bottom line is that, maybe you didn't ask the girl out. Maybe she rejected you. And the same thing is like that with the stock market. You're always going to get the timing wrong, right? You're going to sell too low, a little too low. Maybe it goes up a little higher. Maybe you get out at the right perfect time, but maybe you bought in just a little too late.
Yeah.
And that approach was just driving me crazy. And I did a lot of what you call margin investing. And I still do that, where you actually take a little bit of leverage.
Yeah.
And I know the channel tries not to talk about that, but that is something that I did do. And I lost a ton of money on that approach, especially when you're trying to time the market. So yeah, going back to it, I learned about dividends, and that just plain works. So I went with the single stock approach initially, and I still believe in it quite a bit. Specifically, I like the big 5 top banks, and I picked Scotiabank and CIBC because they paid the highest dividend.
Yeah.
But I also bought Enbridge, Bell Canada, and yeah, like you'll see in my portfolio later that it is always blue chip companies that been paying at least 50 years worth of dividends.
Yeah.
And so when I saw your channel, it started to talk about these covered call ETFs and split share funds. And they were things I was considering before, but I started to say, well, look, I can see some merit in trying to get some higher yields, like above 10%, without taking on substantially additional risk. So I started to sort of toy around with those funds. And slowly over the last few years, I've been increasing my share of these ETF and split share funds. So now I think very much our portfolios are somewhat similar, although it's not perfect. You'll see later on that there's some things that are still quite different.
Yeah. I would consider you a hybrid investor. I talk about all the time. I don't think pure income investing is the best for everyone. I think it's just the best for me. What you do is your choice, and you're a little bit more of a hybrid investor, which a lot of people are. You have some dividend stocks and some PII stuff. So very interesting. So what do you think about all this, Rachel? I'm just curious. I saw you were dying of laughter when Ben was talking about dating and things like that. So how familiar are you with investing and things like that? Or do you kind of just leave it up to Ben? Do you know the general premise behind it, or what's your take?
I don't usually deal with finance.
Okay.
So he is the big boss, actually.
That's a lot of pressure on you, Ben.
That's a lot of pressure on you, Ben. Yeah. How do you deal with that, Ben? You're okay with that?
Well, I mean, I've made mistakes, and I've been crashed and burned many times, especially at 18 years old, being in the front page of the Financial Post. I mean, nobody can compete with somebody who got burned nationally. And hopefully you can share the article, because I don't really mind. But basically, the nutshell is I've learned my mistakes through many years of trial by fire, and I'm prepared to manage this portfolio now. And the bottom line is it's because I've seen how companies do it. I mean, at AIMCO, which is the Alberta Investment Management Corp, you're managing $70 billion of Crown money. So you have to manage that money properly. I wasn't a manager of the money. I was a risk analyst. But I understood if you manage this wrong, you know, you're finished, right? So I don't really mind taking on the responsibility anymore.
Here's the article. Pretty interesting article.
18-year-old.
I
Wow.
mean, there you are, right on the cover there. Pretty
I was
interesting. So this,
definitely skinnier back then.
yeah,
You look good. You look good.
yeah, you look good. You look great. So this basically just talks about your, I'm assuming your trading experience and how it didn't go well. So there's this one here, but there's also this one here. I think this is the front page, right? I mean, there you are.
That's correct. It
18-year-old,
was on a
yeah.
Saturday, and I did not know I was going to be on the front page, but they put that one on the front page, and they took at least 30 different photos of me at the TD Center in downtown Toronto.
Wow,
And
this
then I
is
wake up in the morning, and I'm like, wow, that's me on the front page.
look at that date. This is 23 years ago.
2000.
Wow.
In 2000, yeah. So this is the front page, and this is the article here. Youthful exuberance. So yeah.
So how did they contact you? How did this come about?
Well, I think I'm a bit of a sucker when it comes to wanting a little bit of fame and glory, because I know, Adriano, that you met Michael Kovacs.
Yeah.
I didn't
No,
meet
not
him.
in
I didn't meet
person.
him in person, but we've definitely had many conversations on camera, live, and everything. But yeah, tell me, you've met him in person, right? When you when you were in Toronto?
Yeah, I basically I got jealous, and I said, you know what, Adriano, he does not get to have all the fun. I am gonna email
Funny.
him and say, look, I'm just a guy that's not working. I'd like to meet you, and he's like, sure. And
He's a
then
nice guy.
we had
Yeah,
He's
he
a
seems like a
very
very
down to
nice
earth.
person. Yeah.
Yeah, he's a great guy. We shook hands. He gave me a bag full of like hats and t-shirts. But yeah, I just met him. I didn't meet the other gentleman at Hamilton. I think he's further away, downtown Toronto, and we only had so much time. So I just met Michael Kovacs. But yeah, going back to the article, I just saw that someone else, like they have this column that shows up every Saturday, says financial profile of some guy. It's usually some guy who's in his 60s who, bought some mutual funds or whatever. And I was just reading it, and it says, "Tell us your story," was one of the things it said. And I was like, sure, I'll tell you my story. I'm an 18-year-old stock and options margin trader. And here's my story. And I emailed them, and they called me like right away. And they're like, when can we get you in? And I had this journalist that interviewed me. And I felt with journalism, it's a bit biased in the sense that the article wanted to make me kind of look. I mean, it was good in the sense that like I looked okay, but I think that sometimes the news, they want to make you look like a fool sometimes, and they kind of make you answer the question in a certain way. But anyway, it's all good. I was just 18 at the time, but that's basically what it is. They profiled me and they put me on the paper.
Well,
That's cool. That's pretty cool.
yeah. The way I look at it is, listen, Ben, if a couple of people read that and they decide to learn lessons from it, you've done good for the world. So
Yeah.
you got to tap it. It takes a lot of courage to go on the paper at that age with your picture. So I commend you. I think it's a great thing that you did that. And, we're all just trying to do the best we can and help people. So what you're doing now for actually coming on here and doing this testimonial, by the way, which is great. So getting back to PII now, getting to PII and investing, tell me a little bit about your personal situation. So you guys, we'll share the portfolio at the end, but Ben, I mean, I'm very interested in this. You guys are actually traveling the world. You're traveling the world off your passive income, basically. So tell me a little bit about that experience of being financially independent, being able to travel, get into a little bit the details of that. I'm assuming just using that money every single month. Are you reinvesting some of it?
Yeah, so we did save up a quite a lot of money, and plus we did have a little bit of help. But basically, we have about $1 million portfolio net worth aggregate. And basically we generate around 11,000, like our target is 11,000 after tax per month. And we don't try to push the yield like using different tactics. We try to keep the yield conservative, and we try to target 11,000 after tax income. And that's our goal, because we don't need any more income on top of that. And generally we don't want to take on additional units of risk.
Mm-hmm.
Right.
And although we do margin, which I can show you later, but basically we only use the income, and sometimes I do use the principal, but I try not to do that. And really, over the last 3 years, we maybe only used up maybe $15,000-$20,000 of principal, which is not too bad considering we took so many flights. So during the last, I'd say 3 years, we started to do quite a bit of traveling, and we flew around the world, but mainly to Europe. And we realized that life is cheaper in Europe, and a lot of people think that it's expensive, but that's not really the case. I mean, Norway is especially cheap right now. I mean, if you actually look at the Norwegian krone versus the Canadian dollar, it's actually an all-time high. Like, and not to mention the inflation rate in Norway is actually not that high relative to Canada. So things are actually quite a lot cheaper here. And like this little cabin that we're renting, it's not even that expensive relative to what it is in Canada. So we found that travel actually allows us to sort of save money, ironically, and plus we can kind of see the world, which is what we did, which is one of the reasons why we also came down to Panama to see, or for myself to see you, because it's like, well, we're gonna keep traveling and seeing the world, and eventually we're gonna get tired, but I don't know when that is.
Yeah,
That's awesome.
Hopefully you don't. So you've seen many countries. What would you say is your favorite country?
Well, I think there's some preferences, and I'm a very, my wife would say I'm a very moody person, because it really just depends on my mood for the day. So, if I'm in the mood for excellent food, I might go to Thailand or Japan, where I can just, eat and get fat, right? If I'm in a mood where I want to hike, I'm obviously going to pick Norway. But Portugal's kind of, you get the best of both worlds. You kind of get that really great hiking, but you also get the food, including sardines, which is very good for my diet, especially for what I should be eating every day to lose weight. And so one day we're actually looking to move to Portugal on a retirement visa.
Awesome. So how would you kind of touch upon this? Obviously, we discussed your traveling. How would you say that this investment strategy enhances your life? Obviously, there's the money coming in, but what are some of talk to me a little bit more of the mindset or the psychological benefits of this style of investing? What would you say are the top ones? You sleep better? Do you sleep okay, Ben? I mean, you look like $1 million. You look like you're...
Yeah, you guys both look awesome, fresh and
yeah.
yeah.
Well, I think I sleep well. I don't think about the portfolio much. I'm usually thinking about, actually, to be honest, I've been gaining quite a bit of weight, because every time we travel, I gain weight. And that's because I just eat what's available.
Yeah.
And that really doesn't work. And I've basically said to myself, the only thing that works is I just sort of sit down, exercise, eat healthy. And I think those 3 months I was in Calgary, because I just was waiting for something. And I lost like 14 pounds in the span of 3 months and I built up like so much muscles. It was just crazy. And then once we started to travel, it was all gone. And so, yeah, I mean, in terms of the portfolio, I mean, I sleep better. I really don't care that the market tanks that much. I mean, I do care in the sense that because we have some margining, you don't want to have something called a margin call where they start selling your securities. So I always have to monitor the risk limits to sort of say, okay, if the investments drop by 14%, this is when I'm going to get a margin call. Mm-hmm. And then I may have to liquidate some investments possibly at a loss, but I usually have an idea of which ones I'm going to liquidate and at what price, that sort of thing. But slowly but surely, I'm actually reducing the amount of borrowing, because with interest rates rising the way it has, it becomes more expensive to borrow. So I used to, maybe 3 years ago, I was borrowing $1 million worth of margining. So that I'd say that leveraging was probably up to 70-80%. Now I'm only borrowing like 300,000-400,000. And so I probably brought that down to about 30-35% of leverage. And the goal is to sort of bring that down further. So probably by the end of next year, the leverage will be just close to 20-25%, which is exactly where I want it to be. So the way I see margin leverage is I just want the amount of borrowed money to be about the same as what everybody else is borrowing for their mortgage, because that's the sort of target that I set.
Yeah, so that's it. I always say I'm personally not really comfortable with borrowing on margin to invest money, but I don't see anything wrong with it. When people ask me about it, I always say, as long as you understand the risk and you understand what you're doing and you're on top of things, and it seems like you are. Right, especially last year was all the rage because you get a HELOC, you get it at nothing. Now interest rates are going up, so there's additional risk. You can get margin called, like you discussed. So that's fantastic. So what do you think about financial advisors instead of? I mean, you're managing everything yourself. You have some experience in that industry, right? I've spoken to people that have in the military, or it's a police officer, but you actually have some experience in that industry. What would you say about financial advisor, that industry in general?
Well, I have worked with I did work at Raymond James before as a financial advisor assistant. So I did do sales calls. This was back when I was in university. And most recently, I was at Service Credit Union as sort of the reporting analyst for the wealth management team, which is actually the financial advisory team. And specifically, the thing with financial advisors is they're always going to look after themselves, and it's always about getting the big bonuses for the firm and for themselves. So one of the things that I find is that they're always going to try to sell funds that are, one of my jobs as a reporting analyst was to report on which particular family of funds is going to net the firm the largest revenue increase. And this was a big topic that occurs during meetings. And I would just sort of sit there and present my findings in terms of Excel reporting, optimizing the number of people that you need to get into these funds. I basically, I wasn't a big fan of what they were doing, but it's business, and that's just how business works. And my boss always said to me, Ben, you're a very lousy businessman. It's like, well, geez, thanks, boss, but I just report the numbers. But yeah, like I don't trust financial advisor firms. The only way to manage your money is to manage it yourself, because nobody else is going to manage it better than yourself. And you almost have to study the financial side. I mean, there's no way about it, because if you walk into a bank like a TD Bank or CIBC today, tomorrow, whenever, they're going to sell you their funds, and their fees are going to be skyrocketing high. And they say they want to keep the fees low, but that's just, talk. Yeah. So I don't trust them. I took control when I realized I have no choice but to take control. Otherwise, they'd make me buy some, stupid Fidelity fund or whatever the heck it is. With a 2-3% MER, that they just like, why don't I pick the stocks if you're gonna, like, it just doesn't make any sense. So I took control, and I said never again. And I'm trying to get my wife to study some finance so that she can take control if somehow I get a heart attack or hit by a bus.
Yeah,
that's a good. You got to have a backup plan, right, in case something happens to you. But I mean, sorry, go ahead.
I was gonna say, you mentioned in the beginning how you're a little more emotional, right, when it comes to the stock market and just managing your finances. So for sure, doing it yourself, no one's going to take care of it better than yourself, right? Because you actually care about your finances, and you're basically using the portfolio to live your life. So leaving it up to the fund managers or to the financial advisors, it's risky, because as you said, nobody cares about your portfolio more than you do, right? So DIY investing is very popular now, but it hasn't been the case, in maybe 25, 30 years ago. So recently, with the internet and all sorts of information available, it's easier for people to do it, but it's also like there's an abundance of information, and it could be overwhelming as well. So there's a balance, I guess, that people need to basically to look into.
Yeah. I mean, I've done so many coaching sessions, and I hear nothing but negative things about people who were with financial advisors or with TD Bank, like you said. I don't think I've met one person that was even close to the average market return. So that's, if you're not making the average market returns, you might as well just buy a passive index-based ETF, very, very, very low fee. That's what I actually recommend for beginners who are just trying to navigate all these types of funds. Just go with a passive index ETF, like an S&P 500 to start with. And then as you gain experience, you could change your style based on your needs, your lifestyle needs. So, there's income, there's dividend, there's growth with the index funds. That's typically very, very popular for a good reason, right? Very low fees. You get the average of the market, and that's it. No need to pay a financial advisor to do, like you said, just pick the same easy stocks. There's only so many great companies out there. It's not
especially
really
in
hard.
Canada. I mean, it's financials and energy stocks, and people, some folks don't even know what the average is, that the gain that people could get by just being in an index fund. So if you're not even aware of what the averages are every year, and then so you compare it to what your mutual fund is making, you're unaware that you're not actually getting a good deal there. So it's about, basically first step is being aware, the awareness of what you're investing in, what those mutual funds hold, and then, realizing that you could just do it yourself.
Yeah, especially if there's simple ETFs, they're not even doing covered calls on them. There's no leverage. I mean, they have 2% MERs, but there's no covered call writing. There's no leverage. So what exactly are you paying for, right? So that's why they make a ton of money, those guys, right? With not much work.
But on the flip side, like someone who's working and and just focusing on their career, goes with a financial advisor and gets into a mutual fund, that is actually something as compared to not doing anything at all.
For
So
sure.
we know a lot of people who actually don't even have like TFSAs open, and they just get their paycheck, pay their bills, and keep a savings account. So there's a lot of different I guess levels where people are with their finances. So it sounds to me like you guys are like one of the top you're at the expert level when it comes to investing, and that comes from basically your financial background and all of the trials and errors that you went through when you were young as well. Because personally, that's how I learned. I mean, for sure, you learn from reading books, watching stuff on YouTube, reading articles, but the biggest lessons learned are from making mistakes. And I think that's something that the emotional factor plays a role, because if you're too emotional, then maybe you'll make a mistake and then it'll dissuade you from trying again. But eventually you'll get to if your goal is to just have long-term diversified portfolio, eventually you'll get to a point where you'll get into the indexes or the ETFs, and if you want that extra income, you'll get the ones with the covered calls. So it all leads to similar paths, right?
Yeah, the end of the rainbow is always, it's the journey getting there. It's always going to be, there's always going to be some heartaches, some mistakes, learning curves. So
but it's worth it.
It is worth it.
Yeah.
In the end, it always is. So before unveiling your portfolio, we're going to do that next, Ben. I have to ask you, because you have a lot of experience, not only in the industry, your career, but also managing your own money. What would be just the top piece of advice you would give to people who are still hesitant about managing their own money, hesitant about the stock market? It's been very volatile in the last year or two. It's been crazy. What would be your top piece of advice that you would give to people?
Well, ironically, I mean, most of the time, a lot of people watch Warren Buffett, and I'm not a big believer in listening to people like Warren Buffett on YouTube. I mean, there's a saying that I have, is that people listen to him because he's rich, right? And the same with Bill Gates. I mean, you can't watch a movie about Bill Gates and Warren Buffett and say, well, I'm just going to listen to him because he's rich.
Right.
I mean, the same thing with Donald Trump. He's rich, but some people might not listen to him, right? So the point is I one of the things that I would say as advice is, and I left the channel because of this, is that margin is something that I have no sort of fear of. And so I wouldn't recommend everyone go ahead and go start margining. But what I do recommend is, consider that debt is not necessarily like poison. And I find so many people out there, they hear the word debt, they hear the word they're borrowing money to invest, and they automatically think it's evil, and it's not evil. And that's actually sort of my advice, is I don't want to just say like buy low, sell high, like Warren Buffett says, or stay invested. Like that's just the same mumbo jumbo you hear on YouTube. My advice is, consider debt. If you don't have any, sometimes debt can actually help if you manage it properly and you control the amount of it to your comfort zone. But don't just write it off like a lot of people on YouTube. They don't even talk about it. I would say, have a look at it and see if it can work with your profile.
Interesting. I do agree with what you're saying about Warren Buffett, for sure. He's a cute little old man that's super rich, and he's into dividends and whatever.
Yes, but he's also very established and he knows what he's talking about.
Yeah, and if you actually watch a documentary of his life and the early days, you would see that this guy is really a shark. He's a killer. He's basically a corporate raider. He's bought out companies. He's forced buyouts. So he's kind of, he pretends, but he's like a Carl icon there, which the movie Wall Street is based on. These guys are all very aggressive corporate raiders, which was very prevalent in the 80s, especially 70s and 80s. So, and he almost lost everything quite a few times. He made some bad decisions. So I agree with that. I have a different view on margin. I don't think I'll ever take it myself, but I do agree with you that it could be done safely. I talked to a lot of people who have done just fine with margin. Just got to be careful. You just got to know what you're doing. So all in all, good advice. So unless you have something else, other questions, we'll look at the portfolio real quick.
Yeah, good idea.
So Let's see here. So you're good with us showing everything, right? Even the numbers.
Yeah.
The audience will definitely appreciate it. And I know they're going to ask the question, who do you use for margin? My guess would be IBKR.
Yes, IBKR has the lowest rates. It doesn't mean I like them. It just means I have to go with them because they have the lowest rates.
Okay, interesting. So, so you have here you're non-registered. So let's see here, and this is RSP. Does this include your TFSA as well?
Surprisingly, I don't have a TFSA, and this is another reason why I kind of left your channel, because I think enough people started getting mad that I don't have a TFSA, because I said it doesn't. I mean, the thing is, the TFSA only makes sense if you're actually going to pay a lot of tax, right? If you're not going to, like, if the difference between having a TFSA and not having a TFSA, especially if using dividends, as you said in many of your channel chats, is that it doesn't really have that much tax. So I recommend
it depends on your
income and province,
your income level and your tax bracket, sorry, in your province.
Yeah, so I have a link which is like a tax tips link. It lets you do like a tax return, like plug in your numbers and actually see if you really benefit from a TFSA. And I guarantee most of the people probably won't, because you can make so much money, non-registered dividends, and pay so little tax. A TFSA is not really going to help you much. And on top of that, you have a separate account you have to manage. So to answer your question, non-registered is just the margin account. I have no need for a TFSA.
Yeah, I guess it makes sense for you. It probably wouldn't make sense for most people. I still think everyone should have a TFSA. But it's very ironic, Ben, because I've spoken to someone today who is into PII. I've done a coaching session with him. Very nice guy. And he said that he has $1 million portfolio and he paid like $300 of tax. So what you're saying is true, because if you're in a lower tax, if the investment income is all you have, if you're in Ontario, for example, or BC, those are, I think, the two best provinces, it's insane how very, very little or no tax you pay on investment income. So what you're saying is right, because a lot of it is going to be either capital gains or a lot of eligible dividends, which of course you're going to have a lot of eligible dividends, because as you could see here, it's a lot of Canadian focused stuff. So you have DFN, you have HMAX, you have RA in here. So you have some fixed income stuff here, PDI, RA, real assets. Let's see, HT. Okay, the harvest technology. So you have the enhanced ones here.
Yes. I have no trouble with them using a little bit of leverage to push up the yields.
Very interesting. You decided to take the tech one, the utilities one, the healthcare one, but not HDIF, the all-in-one. What's your reasoning behind that one? You like these sectors more than, I guess you didn't want the US banks?
Well, HDIV, it's too much other stuff. I like to be very controlling in terms of sector, and that's because of risk. I know it's not on this spreadsheet because I have a very complicated one that probably would be too much for the viewers. But it has also like all the tax breakdown. Like it has percentages of return of capital, capital gains, dividends, and it literally flows into an entire tax calculation spreadsheet. But no, I don't really want anything that's too, like, I have HYLD there, and that's good enough. I don't want anything else that's just big buckets where they pick for me. I like to pick for myself. Yeah.
And like you said here, you have big positions here in Enbridge, CIBC, and Scotia, did you say was the other one?
I actually kicked Scotia out recently.
Kicked Scotia out.
I'm trying to reduce my margining, so I was able to kick Scotia without really affecting how much payout I get. Yeah.
So you're making about, on this account, and this I'm assuming is including the margin. You're making just about 100K here, and then you're making 33K a year, so about 130, something like that a year in both accounts. So yeah, I mean, you're at your $11,000 goal, right? Or very close to it?
Yeah, the RSP is all in USD, and I don't know if I converted that, but basically it all flows in at the end after the taxes, and it comes up to around 11,000 after tax. And I always like to factor all the tax, like the tax tips, whatever, the spreadsheet or whatever, you just go online and look for it. But basically, I like to get the after-tax amount, and I always periodically adjust the after-tax amount if ever I pay more margin interest, because margin interest is tax deductible. So I will always adjust the after-tax monthly to reflect my situation.
Okay, now I understand. It is true. You could deduct the interest. So it seems like, with the margin, you're very comfortable. You know what you're doing. Maybe you could create a course on how to use margin properly, or a little digital product or something, because you'll be surprised on how many people are interested in using it properly, using it, speaking to someone who's experienced with that. So yeah, I think you're mostly a PII investor, but I would call you definitely a hybrid investor, dividend income, because you do have, CIBC, Enrich, some big, Great West Life, some nice big positions here in Canadian companies that have pretty high dividends, grow their dividends over time. It's all eligible dividends. You also have ENS, so you have both the Enrich and the ENS. Then you have some stuff like Arbor, which is a REIT, I believe, correct me if I'm wrong, Ben, on the US side. So you do like real estate as well. You have some Arbor, you have some RA here. So
yes, and I also wanted to mention that it's not showing here, but I did want to mention I also have I sell put options. So which I just want to mention briefly. I have a BCE sell put and a Verizon sell put. So just selling put basically allows me to say that I will agree to buy the stock at a much lower price up to a certain date. Mm-hmm. And that allows me to collect a little bit of income, but it also lets me say, okay, I'm going to be buying in if it drops to the certain price.
Yeah, selling put options, I've heard from people, they do that. I'm assuming, is it way out of the money? Do you do like 5, 6, 7% out of the money, or you do like 2 or 3%? Because Bell and Verizon, pretty boring stocks. I don't really move much. So I'm assuming the put options the premiums are pretty low if they're out of the money. But this is just essentially free money if they don't get exercise. And if they get exercise, you buy stocks that you want anyway, right? That's the general premise.
Yeah, and in a nutshell, I don't want to make it too complicated, but I sell really deep sort of leaps, which are very far out, up to a year or two, because I don't want to deal with what you call rolling options. I don't want to deal with that.
Okay, so you buy long.
The second thing, yeah, I go very long on expiry, but I also wait until sort of make it too complicated, but there's something called volatility. And if volatility is high, I actually can collect more put premiums. So I actually wait for the volatility to spike, and then I sell the put premiums, and then I collect more. So yeah, to answer your question, I don't really look at whether it's 5, 6%. I don't really look at how low the price, the strike is versus the current. Mm-hmm. I look at what price am I comfortable to actually buy these shares at, right? So at Bell Canada, I have my strike down at $52. The current price is 60 something. But when I sold it, it was at 57, and I was perfectly comfortable buying the stock at 52 because I think it yields me 7 to 8%, which is a very beautiful yield on a stock that's paid dividends for at least 70, 80 years.
Yeah.
So that's how my rationale is. I buy this. I sell puts on the stocks I want to own.
Very interesting, very unique. So yeah, you're definitely a hybrid investor with a touch of active options trading, which is cool. I mean, I say this a million times, there's no right or wrong way of doing anything, of investing. It's just figuring out what's best for you. On the RRSP side, I see some very high yield stuff. You got CLM, you got Golf, JEPQ, JEPI, RYLD, RA, SVOL, of course, SDIV. So before we talk about the RSP, in a non-registered, what would you say are your favorite holdings? Just if I could ask you that, like, do you have a favorite, something that's been super amazing for you that you absolutely love and you'll never get rid of? Would it be like CIBC or an Enbridge, for example, or?
Well, absolutely. The single stocks are non-negotiable. I will not get rid of those. The reason is because they increase their dividend every year. And I like to see, like, I know your stuff, your approach has rising dividends, but it's harder to see. I need like single stocks that actually increase the dividend. I want to measure that increase against inflation, because that's my bread and butter. If I'm not rising my income with inflation, I might as well not even invest, right? So I use single stocks to really, really push on my ability to keep my income above inflation. And I do a lot of analytics on inflation. What if inflation rises this percent over a period of time? And I do a lot of that analysis. And I want to make sure so the single stocks are the bread and butter. And everything else, I'm okay kind of keeping a mix of and various things like that.
Yeah, we have a lot of questions about inflation and how, because the PII stuff typically doesn't raise their dividends much or at all because they're already giving out a lot or as much as they can. So I get that question all the time. But the honest truth, if you're asking me honestly, the only way to fight, you can't fight inflation. The only way to fight inflation is make more income or reduce your expenses. So I have a bit of a different view. I don't need stuff that keeps raising their dividend all the time. I rather always reinvest a portion every month to make more money. And that's the way I kind of see how to fight inflation. But you have your style, you have your hybrid approach, which is good. Anything on your side?
No.
When it comes to the non-registered, all good standard stuff, all quality, either quality fixed income like a PDI and GOF and RA, or just quality blue chip stocks with either covered calls, leverage, both. Or,
yeah, it's a good mix, to be honest.
Yeah, it's very nice.
It's very hybrid approach with the single stocks versus the ETFs versus covered call ETFs, some with leverage, some with not. I mean, you got the Canoe as well. I mean, these are all very, classic income oriented investments. So
yeah. And even on the US side, so if you look at your US side, you have a lot of the same holdings. You have SVOL, CLM, the JEPI, JEPQ, GOF, all of these. So how come some are in gray and the other ones are not? Can you just explain that? Is that ones you're using margin on, or?
Oh, they're repeated.
No, so RSPs don't allow you to use margin. It's just the grays is mine, and then the white is my wife's.
Okay.
Yeah.
Okay, cool. So what would you say are your go-tos or your top favorite ones? I hate the word favorite, but in your RSP, which ones are kind of like the non-negotiable, like you said, your foundational ones? Would it be something like JEPI, JEPQ, or?
Well, you'll notice with the RSPs, I actually copied you quite a lot more than, like, I know in the non-registered, it doesn't look anything remotely like yours. Maybe it's got a few holdings here and there. But on the RSP, I said, you know what, I'm going, because at one point I made a decision. I was going to crank the risk out on the RSP substantially because it's in USD. And I want my RSP to be flat. Like year after year, I'm not interested in any form of capital appreciation at all. So I specifically wanted to pump the yield as high as you could. But of course, when you started, I didn't feel comfortable with the Bitcoin, or I know you've got this Tesla Max, and I don't want any of that. So I stuck to a more conservative approach. So you'll notice a lot of the holdings there are actually some of the similar to the ones that you had maybe a year ago. But I also said, you know what, I'm going to include, I really, really like JEPQ and JEPI. I kicked out QYLD because they just blind me the right options, and I want somebody that's actually going to write options that make sense, right? And so I would say my favorite is JEPQ, JEPI. CLM, honestly, CLM, I'm not a big fan of, but I kind of understood when you talked about it in your videos, and then I did the research on it. I said, I'm okay with the principal kind of going down because it pays out so much. So I've got other investments in this RSP that clearly don't really drop. Like there's no principal erosion. So that part will kind of cancel out whatever CLM is doing at the end. But yeah, the RSP's goal is to pump out income as much as possible, because every single year I am draining it. Like I am not reinvesting any of it. All of it is coming out. Because if you actually do the math of my overall tax situation, the RSP should be pulled out every year. And then eventually, I'll turn it into a RIF or whatever and pull it out when I'm 71 or whatever. But I absolutely do want to pull from my RSP every single year, because that's sort of my bread and butter in terms of income.
Interesting.
Yeah, interesting.
It looks like you're on top of things, man.
Yeah.
You're on top of the game, on top of your game. So as long as it's working well for you, the money's coming in. That's great. So thanks again for showing your portfolio.
Thanks for sharing the portfolio.
Really appreciate it. Cash cow, man. So how does it feel just getting that 10, 11 grand a month and being able to travel and spend it? I mean, I just can't stop thinking about that, how awesome it might be. Like every time I look at your Instagram, you're in some other country. What's the feeling like that? And correct me if I'm wrong, you're not working, right? Technically, you're not employed right now?
No, neither of us are employed. I left my role in 2021, September. I gave it a try for a while. And then my wife kind of joined me about a year ago, 2022. But yeah, like we get a lot of people that are jealous. Some people, because neither of us, we decided not to have kids. We decided not to own a house. And we have we have almost our entire lives in 2 suitcases. And
I love
some
that.
people, like, they just look at us and say, what the hell is this? And we've got thousands of photos on Facebook. Like, I don't even know, countless photos. And, over 100 flights we took in the year 2020. And so there's so many travel experiences, and we do get a lot of flack. I mean, I've had people cut me off because they're just tired of seeing us travel. But
Well, that's how you
yeah,
know who your real friends are, right?
Yeah.
that's true. That's true.
So
But
what's the point of having people who are just gonna
There's definitely a criticism no matter what people do, right? If you live a certain way and that doesn't look precisely like the way they live, so they'll criticize. It's a social pressure. We see it too as well. I mean, there's unconstituted criticism for no reason, and it's mainly because you're just living a life that means something to you, and not necessarily it's the same for other people. But it's funny to see the judgment and the criticism, and it just makes me kind of giggle because I've never looked at someone's profile and would criticize how they live, because it's none of my business. If they're happy, they're happy. So that is definitely, for me, it's been a learning experience having to deal with that.
It's not easy once you deviate from the norm. So let me, whatever it's value to you. I am certainly happy for you guys.
Yeah, for sure.
I am, we are certainly proud of you guys, what you've accomplished. And I'm happy for you. You enjoying your life? I got to ask this question. So look, we come from immigrant parents. Maybe you guys do too. In the Asian family, I know it's all about getting that house. And we get the same thing on the Italian side. What do your parents think of all this? I want to hear from Rachel. Do they freak out? Did they freak out at the beginning? Are they okay with it now? How do you deal with that? Or tell me a little bit about that.
His mom and dad actually were pretty upset with us.
Doesn't surprise me.
Yeah, but then over the time, I think they just kind of understand that this is our life,
right?
And they have to respect what we chose, and so now they just like, as long as you guys are happy.
Well, that's good. Yeah, I wish they would just start with that.
Yeah,
instead of
they'll eventually get there, right?
Eventually, they should get there. Yeah,
it does take time.
Yes. But it's normal. I mean, they had a completely different experience, just talking about our situation, coming to Canada. We're first generation Canadian, so completely different experience on their end. So for sure, they have certain expectations, or they basically, just assume that you will do what normally is done, or what they say that you should do. But for sure, they'll get to a point where they're happy for you and they're proud for you. I mean, it's just natural, right?
Yeah. I mean, for me, thinking of doing that kind of life, I never wanted to do it. For me, it was always a nightmare. So I'm like, no, I got to do something different.
He's definitely like,
I'm a contrarian. Like,
I mean, to the extreme. It's sometimes it's frustrating because it's too much, in my opinion. But
most people with houses and they do that life, they're not happy anyway. They're it's almost like the house becomes a prison. And I get it. It could be a great investment over time, but at what cost? Life is short, as you know. You guys are enjoying it. So.
But there's also people that don't realize there's other options, right? So I know, personally, my friends that have homes, that own their home, and they're, they feel more secure, especially as maybe a single mom or a single parent, and they have that asset in terms of their home. So it's definitely something, this type of situation of owning versus renting is it's been for hundreds of years. We've had owners and renters, so it's basically coexisting, right? So whether to debate it seems frivolous to me personally, but it is a hot topic that people like to discuss. And it's always been according to what your preference is. And, we're just two examples of people that decided to rent, and, we have a different lifestyle. So we're all about showcasing, different ways to use your assets and use your money to live, right?
Yeah. Ben, do you get that comment that, aren't you scared? Don't you feel that it's risky to invest in the stock market instead of investing in a house? Do you always laugh when you hear that? Because I do.
Well, the thing is I've seen people become mad with real estate. And it really gets to me because people are, especially, I'm coming from Toronto. Like, I was born in Toronto, and my mom and dad used to be into real estate, and then they lost money into it. And I see what it does in terms of boom and bust markets. And, it's great if you're timed the Toronto market perfectly and you made a killing, but it's not great if you're maybe buying into Edmonton where we lived for about 10 years, because I think it's been pretty flat in Edmonton.
Yeah.
But yeah, like real estate is just, it's too much. And stocks, I understand. I put my blood into it. I've lost money in it. I understand it. So I'm gonna stick to what I know.
Yeah. That's a really great advice, to be honest, is really investing in what you know, regardless of what it is. If you've been researching it, if you've been in it, you've gained, you've lost, you know what you're talking about. That's the best
Yeah.
way to invest it, whatever, you know, investment you're discussing at that point.
Yeah, and people need to understand that, you know, stocks are assets also.
Yeah.
Right? They think that just because it's real and it's a house and you could see it, that's an asset, but real estate is just one of 11 stock market sectors. So that's going back to why I say I laugh, is because I feel I'm much less risky than you. You have one house, all your money's in that. I have property all across Canada and the world, and companies all across the world. I think that's a lot less risky if you ask me. And if you have a mortgage, you're leveraging. Also,
Yeah.
people don't realize that you're using margin off your house. So
yeah, it's like you mentioned, if you did buy property in a hyper urban area in Canada, then good, that's great, you know, like 10, 20, 30 years ago, that's awesome. But some, you know, folks, they maybe not necessarily got into an urban area and in more of a country or suburban, those remain flat unless there's, you know, something that occurs like in 2020 during COVID, where you know, the prices of chalets and homes that were out in the country went up because people were trying to get away from the cities, right? Because of the lockdown. So those are all very specific scenarios, but you know, talking about sector allocation, if all your money is tied into that one house, it just makes it more difficult to, you know, have other options and experience something like, you know, going snowbirding, for example, or taking
you're tied down
a couple of months somewhere else, you know. So
yeah, much more flexibility the way we do it, right? You could just, like you said, you have your life in 2 suitcases. Most people think that's weird, but I think that's great. That makes complete sense to me. Pretty much the same thing, maybe 3 suitcases, but that's pretty much it. I mean,
it's more for me personally, it's more of not having attachment to physical things, because we had a condo for almost 10 years in Montreal, you know, like really in the heart of the Le Plateau there, and it was very, very hectic living there after a while, you know. And then having to you know, just deal with all that stuff, the physical stuff that, you know, after years and years you realize, okay, well, I never use this, I don't need this, I don't, you know, why do we have a second room full of a couch and another TV or stuff like that? So
yeah,
it becomes more of a, you know, I'm gonna throw the word minimalism in there, but just really to take control of, you know, what is consuming your life, whether it be physical stuff or whether it be like, you know, too much absorbing of media, whatever it is, you know, there's always a level of balance that people need to do. I think it's a good exercise to do like an audit of your possessions and get rid of the stuff that is not required, because eventually, like, we're seeing it with our you know, parents, where they have you know, a house full of stuff, and what's going to happen,
they're kind of stuck, you know. It's
a conversation that has to be had, and it's you know, it's uncomfortable. And so just, you know, much like, you know, you have your Excel sheet, you know exactly what's coming in, what's coming out. It's important to maybe do that type of activity with your physical stuff, to really, you know, look at what you need, you know, and get rid of the stuff you don't need. Whatever doesn't make you happy, get rid of it.
Yeah, we got rid of most of our stuff. I mean,
well, we did put stuff in storage, you know, but like furniture, I mean, I remember when we bought furniture, you know, when we got married and we bought this furniture, it was like £1,000 for like, I'm exaggerating, but we're talking about like this very heavy, you know, Italian stuff. And when they were bringing it into the condo, I just kept thinking about, oh my God, what are we going to do if we want to move? Like, how are we going to get rid of this stuff? And, you know, 10 years later, I had to deal with it.
We had that problem.
Yeah.
It was a problem. Yeah.
So I mean, these are all like, you know, I'm mentioning this because it is a fact that you need to consider, you know, when you're young and you're thinking about getting your own stuff. And so, you know, there's other options out there, and, you know, not to repeat the mistake other people made. That's why, you know, I'm talking about it now, just to bring it up.
Yeah. Excellent. So
I had a last question. We didn't mention it, but I wanted to talk about a little bit about the market fluctuations that we've been going through. Like we talked about it, we briefly touched on it, but basically, you know, 2020, we got, you know, we'll talk about the last 3 years. 2020, you know, obviously COVID crash. 2021, everything like skyrocketed. So whoever, you know, was buying in 2020, you know, they reaped the benefits of 2021. And then 2022, we had a down year. I mean, it was just brutal. I mean, we saw, what was the main one? Was it financials or tech? Tech was,
yeah, tech, but now tech is starting to go back up. So
yeah. You know, within the 3 years since COVID, there's been quite a bit of volatility. We have not yet seen or surpassed previous highs that we got in 2021. I'm talking about the indexes, you know, just in general. So just in terms of all the volatility, like how does it impact your day to day or how you manage your portfolio, or does it actually impact you at all?
Well, I mean, going back to that margin example, I have systematically reduced the amount of borrowing, but I don't do it by impulse. It's sort of decided beforehand that I'm going to slowly, and I have reduced that part, so I don't pay as much interest. And by reducing the amount of borrowing as well, and sort of shifting towards more high yield income funds where they do the leverage for you, I'm ultimately sort of taking that up and down risk away more and more and more.
Okay.
So the margin, we have something called the sort of buying power, which is how much of a cushion you can sustain. And I can sustain approximately 16% market drop right now without having to sell a single penny.
Okay.
Is the market going to drop another 16%? Possibly. But I sure as hell have everything sort of timed out where I'm going to say, you know, if it drops by this, I'm going to sell this and sell that. But yeah, like going back to it, I'm not worried about the market fluctuations at all. Like if I see a sector that's been very badly beaten up, like that call, you know, your U.S. banks video,
Yeah.
you made a U.S. bank,
Yeah.
I may consider it. Right now, I don't have any money left to buy it, but I certainly will buy up sectors which are very badly beaten up, and I'm not going to start panic selling as a result of what's happened.
Yeah, and I love that answer, because when you have this experience of being or having, like, you know, the skin in the game, meaning you're invested in the stock market for the amount that we both have a significant amount. And when you have the skin in the game and you see the market fluctuations that way, the response is like your eyes are opening and you're like, oh my God, you know, there's so many good opportunities right now. And as opposed to people who, you know, maybe have that little bit of fear inclination because they're newer, they haven't been in the market for a long time, they haven't experienced these fluctuations. Like I remember a rude awakening in 2008. I mean, just, you know, playing around with Air Canada and Bell and those single stocks, and 2008 crash, and it was just like, oh my God. Then again in 2011 because of the debt ceiling crisis actually, and then 2020. So when you see these things happen, you know, at a certain point, because you're in the stock market for as long as we are, we understand that they're actually opportunities. Like, you know, everyone says it, you know, be greedy when people are fearful, whatever, you know, everyone talks about this stuff. We see the memes and everything, buy the dip, all that stuff.
But not many people do it, follow it.
But to actually like wholeheartedly see an opportunity instead of being fearful, this comes with just having that experience. I think that it's important to, you know, to highlight that and to talk about it, because we're both, you know, late 30s, early 40s. You know, we've been in the market for like 20 years. We've been working, you know, the whole time trying to save up and get some portfolio going, get that growth going as a younger person in our 20s, and then just developing a strategy that is more comfortable with who we are, the way we want to live, and all that stuff. And that comes with time. So, you know, I guess the message is for everyone to have some patience when it comes to these market volatilities. These fluctuations will always happen. The headlines, you know, it does impact investor sentiment. People like to panic sell. So it just is just, you know, I'm just trying to reaffirm that with experience, that fear does subside a little. I mean, you do see the opportunity instead of actually panicking.
Yeah. What do you think about that, Ben? Do you watch the news at all, or
do you guys watch the news? Do you follow the headlines?
Yeah, I mean, lately I have been following the U.S. debt ceiling, but I could care less. Like I honestly could care less.
Just it's always the same thing. I mean, it's not the first time. It's probably not going to be the last time. It's just so dumb. It's just a reason for headlines, and people get scared, they sell, and we buy. That's just what it is.
I mean, you know, back in 2020, someone we got a comment like, "Oh, you were just lucky. You know, you're just lucky because you didn't sell."
Luck had nothing to do with it.
I don't get that. That was such a weird statement. Like, how is that lucky? I mean, we did not sell. You sold, therefore you were unlucky. I don't know. It was very strange. So yeah, and the debt ceiling. It's funny. We just made a post about that, and just to basically for some better understanding of what that is. But you know how it is in the U.S. and other countries. They have a limit to the spending, and when that limit is reached, they'll increase their debt, right? Just like a credit card or whatever. So this is something that goes on. It's just part of, you know, government. It's part of the way they govern the economy.
It's part of the system.
Yeah, it's part of the system. And so I like to hear from other people how they react to headlines and stuff like that, especially people that have skin in the game in the stock market, because it's a good insight for newer investors to see how, you know, yes, those headlines will be out there, and if it's not one thing, it'll be something else, and so forth and so on. So
always something.
yeah.
Always something. There's always going to be a new war. There's always going to be a new problem, a new president, a new trade war,
Proxy war, inflation, interest rates.
Always.
Yeah.
Always something. So just buy and hold in great companies, and that's it. Great stock.
Yeah.
So
And travel the world. Like
travel the world.
like
Enjoy
you
your
guys.
life, because it's short. Anything could happen.
Yeah. I mean, that's truly like we've, you know, throughout our life, you know, you meet people, you know, at work. There's been people that have actually, you know, have passed on. They literally died because whatever, you know, health reasons. But when you see stuff like that, it really puts things into perspective, and you really understand how, like, you know, you have to enjoy your life. You only have that one chance to do it, right? So
yeah. Well, listen, guys, it was nice talking to you. I think we spent a long time with you.
Yeah, I've been rambling on. Sorry.
We could talk to couples like you and other people in, you know, in investing for a long time. So thanks again for doing this. Really appreciate you sharing your portfolio and everything. And I wish you luck on everything, and we'll keep in touch.
Yeah, definitely.
Thanks, Rachel. Thanks, Ben.
Thanks, Ben and Rachel. Take care.
Bye.
Bye.
Bye bye.